Hello, good afternoon, everyone. I hope you guys have had your lunch already. Okay, so good afternoon, good afternoon. All right, so thank you for joining us today for this insightful webinar, E-Invoice Era, Software Automation Solutions and E-Invoice for SMEs. We are thrilled to have you with us as we explore these crucial topics that are shaping the future of business, operations, and financial management. In today's fast-paced digital landscape, staying ahead of the curve is more important than ever. E-Invoice has emerged as a game changer in streamlining invoicing processes, reducing errors, and accelerating payments. We'll dive into how transitioning to E-Invoice can not only simplify your workflows, but also enhance your overall financial efficiency. All right. So our expert speakers today brings a wealth of experience and knowledge in these areas, and we are excited to share their insights with you. We encourage you to actively participate, ask questions, and also make the most of this opportunity to learn and engage. All right, so before we move into our first session, I'm excited to announce that we will be having a lucky draw. So one lucky participants will win a 12 months free subscriptions to the Q&E AI Cloud Accounting Professional Plan. So to enter, simply like and share our Facebook page and post about today's webinar. So it's just that easy. Don't miss this chance to enjoy a powerful accounting solutions for an entire year completely for free. All right, so let's get start moving. Like and share now for your chance to win. So good luck to everybody. All right, so dive into our first session. I'm pleased to introduce Mr. Michael Chia, the Tax Associate Director at Crowe Malaysia, a leading firm renowned for its expertise in audit, tax, advisory, and consulting services. Crowe Malaysia is highly regarded for its cutting-edge solutions and deep understandings of the Malaysian tax landscape. Michael will be sharing his insights on leveraging e-invoice for small and medium enterprises. With his extensive experience in tax advisory, including domestic and international taxes, corporate restructuring, he will provide valuable perspective on how e-invoicing can significantly impact and streamline business operations. Without further ado, I will turn the floor over to Mr. Michael.
Thanks, Amanda, for the introduction. Yeah, so I'm Michael from Crowe Tax, and we would like to take this opportunity to thank Q&E as well for organizing this together with us and providing us a platform to share on e-invoicing for SMEs with everyone here today. So e-invoicing is not something that maybe is new for Malaysia, but in fact, we have already completed the first phase of e-invoicing implementation for batch one companies, for those with a revenue above 100 million ringgit. And of course, with any new introduction of new procedures, we had actually experienced a few hiccups with our clients when we were helping them to implement e-invoicing, especially with the Inland Revenue Board constantly updating their guidelines. So we have to keep up to date with the new provisions of the guidelines so that our clients could implement e-invoicing properly. But today we are going to share all the latest updates on e-invoicing so that for the participants here today, you hopefully by the end of the session, you will be well knowledge on what is e-invoicing for the Malaysian context. Right. So as I mentioned, Malaysia is not the first to implement e-invoicing. So for us, it's a new thing. But on the left hand of the screen, you can see that there's actually more than 20 countries that has already adopted e-invoicing. So there's the list of the countries. Closer to us, you can probably see that at number 14, Singapore has also implemented e-invoicing, as well as other Asian countries include Japan, China, and the others are European countries, basically. But there is a significant difference between the e-invoicing that Malaysia is implementing compared to these countries. For starters, some of these countries, e-invoicing is not mandatory. That's for one. Two is that none of these other countries actually use e-invoicing for tax purposes. Those are more for reporting purposes only. But in the Malaysian context, our e-invoicing is actually being used by our Inland Revenue Board of Malaysia in order to track taxpayers' compliance with taxes, right? And on this slide, we have the notable developments. So as probably everyone knows, on 3rd June 2022, it was when we first heard about this implementation of e-invoicing in the 2023 pre-budget statement. Then on 7th October 2022, which was budget 2023 announcement, this was when it was initially announced to public that Malaysia will be implementing e-invoicing. So then on 21st July 2023, the first guidelines, the first IRB's e-invoice guidelines 2023 version 1.0 was published. 29 September 2023, the e-invoicing guidelines was updated, e-invoice guidelines 2.0, and also the introduction of the e-invoice specific guidelines 1.0. Then 28 October 2023, there's e-invoicing guidelines 2.1 and e-invoicing specific guidelines 1.1, another update. And then on the 13 October, 7 November, and 29 December 2023, included in these days was the announcement of Budget 2024, as well as the publishing of the Finance Act Finance Act number 2, 2023. Why is this date important for e-invoicing? Is because this was when the legislation for e-invoicing was introduced into the Act, the new Section 82C of the Income Tax Act. Then subsequently, on 9 February, there was an update on the e-invoicing guidelines again, which was General Guidelines 2.2 and Specific Guidelines 2.0, as well as IRB launching the software development kit. So there's this is basically the timeline of how e-invoicing come up to be up to now. Then, of course, as we know, on 1st August 2024, which was last month, was when the first batch of taxpayers went live with the invoicing implementation, those with the revenue above 100 million ringgit. Right, so as I've mentioned a few times, here we have the e-invoicing implementation, which is being rolled out in phases. So as I've said, the companies with an annual turnover in 2022 above 100 million ringgit, they would have implemented e-invoicing by 1st August 2024, which is last month. The next batch will be those companies that have, those businesses that has a sales turnover between 25 million ringgit up to 100 million ringgit. They are required to implement by 1st Jan 2025, and the rest will be implementing by 1st July 2025. So basically, by 1st July 2025, we expect all businesses to go live for e-invoicing purposes. But the thing is that a few weeks ago, or maybe it's more than a few weeks ago, the Ministry of Finance has actually announced that IRB, the government will be giving a 6-month concession period for businesses. Within the 6-month period, they are allowed to consolidate all their e-invoicing. So under a consolidated e-invoice, which is something that we'll cover later on in the slides. So basically, businesses that are required to implement e-invoicing by the respective timelines, by the respective target date of implementation. On top of that, they have another 6 months concession or relief period, whereby they do not need to be able to go on to a full implementation. They are allowed to actually just report their monthly income via consolidated e-invoice, right? So each batch of e-invoice implementation will be afforded this 6 months concession, meaning to say that for the last batch, those businesses with below 25 million ringgit turnover, technically they have to go live only by 1st Jan 2026, full implementation. The period between 1st July 2025 to 31st December 2025, they are allowed to go under the concession, whereby they can report all their income under consolidated e-invoice, which is done monthly. So these are the implementation dates to take note of. And on top of that, government also announced an additional exempted category, which is for micro SMEs earning below 150,000 ringgit annually. But up to date, as if you can see from this snapshot from the newspaper, this was announced on 2nd July 2024. But up to date, we have not received or the conditions or the guidelines on how to implement this exemption has not been released by Inland Revenue Board. So the government has announced, and we know that businesses that has 150,000 ringgit annual turnover will be exempted from e-invoicing. But how this category of taxpayers will be exempted, and on top of that, how would other businesses that are interacting with these businesses that are exempted, how will this exemption affect those businesses that procure services or goods from this exempted business? How would it work? We are still unclear because we are still pending for the updates on the guidelines on how all this will work out, right? But it's just a thing to know that if your business has an annual turnover below 150,000 ringgit, then potentially you might be exempted from implementing e-invoicing in the future. Okay. But one thing we know for sure is that or probably this 150,000 annual turnover will be a rolling 150,000 ringgit threshold, similar like how they do it for sales and service tax thresholds, their respective thresholds under SST. So businesses will probably then need to monthly constantly monitor their annual turnover, their 1 year turnover, forward, backwards, to see whether they surpass 150,000. Only if they will be below 150,000 ringgit 12 months turnover, then they'll qualify for the exemption. We assume that this is how this 150,000 ringgit turnover exemption will apply for e-invoicing as well. So that's the exemption. And then next we look at the legislation, which is in all tax cases the most important section. So in terms of legislation for e-invoicing, we have this new section 82C of the Income Tax Act. This section basically requires a person to issue electronic invoice for each transaction in respect of goods sold or services performed for the year of assessment. The minister is empowered to prescribe the persons as well as particulars to be included in e-invoicing. So you'll see this comes out in all the guidelines and whatnot, which comes under section 82C, sub 2, sub B, under guidelines, which covers guidelines under section 134A of the Income Tax Act. The conditions and specifications for e-invoice shall be determined by the DG under the guidelines issued in accordance with section 134A. So section 82C sub 2 sub B is the section that empowers the Inland Revenue Board to issue the guidelines which taxpayers needs to adhere to, right? And then we have section 82C sub 3, which is the validation section. Any invoice issued by a person shall be transmitted electronically to and validated by the Director General, right? So these are the important sections in the Income Tax Act with regards to e-invoicing. Then, of course, in order to ensure compliance, there's a penalty provision also included in the Act under Section 120 sub 1. Failure to issue an e-invoice, a self-bill invoice, or a consolidated transaction invoice will result in a fine of not less than 200 ringgit and not more than 20,000 ringgit, or imprisonment not exceeding 6 months of both for the business that is non-compliant. If you see the range 200 ringgit to 20,000 ringgit, if you just look at 200 ringgit, it might look like a small amount for infringement. But one thing to note is this penalty is levied upon each transaction. So if you miss out one transaction to create e-invoice, then you might be penalized between 200 or 20,000. But if you totally don't implement e-invoice, means if let's say you're looking at 100 transactions per month, you're already looking at, if you look at the maximum penalty range of 20,000 ringgit, 100 transactions a month, you're looking at a 2 million ringgit penalty each month. That's why it's very important to implement e-invoicing as well as implement it properly so that you do not infringe any of the legislations. Here we have snapped out actually is the general guidelines and specific guidelines. This is for your own reading if you have time. These guidelines can actually be downloaded in the Inland Revenue Board website. there are more than 100 pages or more than 200 pages in total if you total up both the guidelines. So there's quite a lot of content and a lot of things to follow in the guidelines. But we have actually summarized out the important points in our presentation today. Okay, then on top of the general and specific guidelines, we have the industry-specific FAQ, which is also, you can get it from the Inland Revenue Board website. This is actually snapped from IRB's website, basically. So currently there's 8. So you can see there's the healthcare, construction industry, telco industry, e-commerce, petroleum operations, insurance and takaful, aviation and tourism industry. But of course, we expect more guidelines to be issued in due time to address the, more FAQs to be issued in due time to address the questions raised by the specific industries. Okay, so there's some information, there's just some information about e-invoicing. There's actually a lot more, which we'll look at as we go on. In the next section, we'll look at the workflow and data fields. So what is an e-invoice? This is the most basic. So what is an e-invoice? An e-invoice is a digital representation of a transaction between a supplier and a buyer. E-invoice replaces the traditional paper or electronic documents such as invoices, credit notes, and debit notes. Validation of e-invoice by IBM is done instantaneously. From our clients in batch 1, we can confirm that so far, the validation of e-invoicing is quite consistent, quite okay, in the sense that it is quite instantaneous. Within, I think most of it is being validated within 5 minutes, considering if all the information is properly sent to the IRB's server. And e-invoicing also helps to safeguard against data tampering, right, which we'll talk about more later on. So an e-invoice is a file created in the format specified by an Inland Revenue Board, which is basically 2 files, XML file and JSON file. The formats of e-invoice is not a PDF file, doc file, JPEG file, high copy invoice or email, etc. In any other format, basically, an e-invoice is only in XML file or JSON file format, right? Here we have overview of the workflow, overview of the e-invoice workflow. This is under the Continuous Transaction Control Model, CTC model. I will not go into detail on this because I understand that Q&E, Shirley from Q&E will also cover this in her presentation later on. But if you just look at the workflow here, you can see that it's basically supplier send the information to IRB system for validation. If it's successfully validated, IRB system will push back a validation. Supplier can create the e-invoice and then send it out to their customers. So there's a very general. There's a lot more technical aspects to it, but I'll let Shirley go through it later on in her presentation. Then there's a My Invoice system via API. Option B, which is the API method. There's a difference between PayPal access point and non-PayPal access point. I believe Shirley will go through, so I will not talk through this. I'd like to spend more time on the technical aspects of e-invoicing, which is what we see now. So for e-invoicing, there are 55 required fields for e-invoicing, 55 plus 12. In fact, there's another 12 in the next slide. So of these 55 fields, those that are highlighted in white are mandatory fields, while those highlighted in orange are optional fields. So these are the actual information that you will need to include into the file to be sent to IRB's server for validation, their system for validation. So any of these fields that are not correct could result in your e-invoice being rejected, means non-successful validation. So of the fields here, you can see that there's the supplier's name, buyer's name, then the supplier's details such as your tax identification number, business registration number, SST registration number, tourism tax registration number where applicable. The email is now optional. The MSIC code and the business activity description. And also on the buyer side, you also have the buyer's tax identification number, business registration number, and SST registration number, as well as the email, which is optional, right? So these are the important fields because these fields can be checked by IRB side. In their system, they have already tied into SSM system as well. So they are able to confirm if the TIN number is correct as well as the business registration number or the IC number is correct. That's one of the things that they are able to confirm. Any of these field is wrong, the system will automatically reject the e-invoice validation, right? Then we also have the supplier buyer's address, the contact numbers, and more importantly is the not the invoice details. So you have the version, the type, the date and time, the digital signature, so on and so forth, and the product or services description. So you have the classification, description, the unit price, the tax type, the tax rate. So the tax type here is referring to sales and service tax, which is where the Director General of Customs comes into play. So if you read through all the legislation, one of the sections in the Income Tax Act also enables the Director General of Customs to view those information that you have submitted to the Director General of Inland Revenue. For the customs side to also check on the compliance of indirect taxes like SST. So this is one of the important areas to cover as well. If you have been non-compliant with SST, once you go into the e-invoice implementation, the e-invoicing era, potentially customs might be able to pick up that you're non-compliant and they might come to check on your business. Okay, then the payment info on the right side, this is fully optional. Payment mode, suppliers, because I believe certain businesses already put the payment info on your e-invoice as well, on your existing invoices already. So these are the 55 required fields. On top of that, we have the 12 additional fields. These are industry-specific fields or business-specific fields. So on the left-hand side, the box with the 4 details, these are for drop shipment businesses. So for example, if a business procures goods from company A from company A. For example, let's say company A is from Selangor. Let's say company A is from Selangor. You procure from the company A, and the business will sell to company B, right? But instead of company A transporting the goods to company B and then transporting it back out to company instead of company A transporting the goods to the business, and then the business needs to transport the goods back out to company B, there might be a situation whereby the business will request for company A to transport the goods directly to company B. So that is considered a drop shipment model, right? So for e-invoicing purposes, if your business is doing this drop shipment model, on top of displaying or sharing your the suppliers, your customers' details, you also need to share the shipping recipients details. So you have the customers' details as well as the shipping recipients details on your e-invoice. So that's for the drop shipment model on the left-hand side. On the right-hand side is applicable to importation and exportation of goods, right? So you have the customs reference number form K1, K9 for imports. And then you have the Incoterms, product tariff code, free trade agreement information, authorization number, K2 form, country of origin, and details of other charges. One thing to note that most of the fields here on these 12 fields are now considered optional, but we have reason to believe that the Inland Revenue Board is allowing these fields to be optional as a temporary measure to ease businesses to onboard for e-invoicing implementation. We trust that, or we believe that some of these fields will be converted back as a mandatory field once there's been full implementation of e-invoicing, especially the Customs K2 reference number for exports, right? In the past or before the recent updates on e-invoicing, in fact, the 4 fields on the left plus a few fields on the right is actually mandatory fields. And then on the latest updates on the guidelines, they have made it optional. They have made it optional for now. And our understanding for IRB is that it's optional so that it will be an easier implementation for taxpayers that are implementing now, ease their processes for implementation for now. Once there's a full implementation of e-invoicing, it will be turned into mandatory fields. That's our understanding for IRB. Okay, then there is the 55 plus 12 fields to take note, which are the information that the businesses need to transmit to Inland Revenue Board. Next, we look at the classification codes for e-invoicing purposes. Currently, there is 45 codes, 001 to 045. But if you look at the codes or you look at the descriptions now, you might realize that most of these products are related to personal tax relief, right? So you have the 003 computer, smartphone and tablets, 026 subscription of books, journals, magazines, newspapers. All this comes under the lifestyle relief. Then you have also the gym membership under lifestyle relief. Then you have education fees for the child relief, all those medical expenses for medical relief, and so on and so forth. Yes, currently it's mostly used for personal tax relief, but for businesses, the key numbers that you need to take note of is probably 004 for consolidated e-invoice, 006 for disbursement, 007 for donations if your company is collecting donations, or your those businesses or associations that collect donations. 008 and 009 e-commerce transactions. Then we have 022 others, which a lot of businesses will fall under others. So basically, if your business products or services do not fall under any of these 45 provided classification codes, then your transaction will, your sales or your transaction will fall under item 022 others. Then we have 027 for reimbursement, and also 033 to 037 for self-built e-invoice, right? So these are the key ones. And also 045 for self-built non-monetary payments to agents, dealers, and distributors. So what does this mean for taxpayers is that why is this e-invoice, why is this classification codes included inside the e-invoice? So the answer is, if let's say once full implementation has been implemented, e-invoicing has been fully implemented from 1st July 2025, if you don't talk about the concession. So from 1st July 2025, and in the future, the government is going to include a provision in the Act that requires for all taxpayers, whether you're business or personal, if you want to claim tax deduction, claim capital allowance, claim personal tax relief, you will be required to substantiate that transaction with an e-invoice. So what does that mean? For personal, if I'm claiming tax relief in the future, I will need to request the e-invoicing, and the e-invoicing will clearly state what kind of product I have purchased. So for example, if I purchase a computer, the e-invoice will have a 003 code computer, which is tagged to my name, because all my personal details are also included in e-invoice, which has been sent to IRB's website and IRB is keeping. So potentially in the future, when I want to claim the tax relief, when I want to submit my tax returns for that year of assessment, once I log into my tax returns, my Form BE, automatically the lifestyle relief will have an amount there, which is the amount which I have paid to purchase this computer, right? So that is something that the IRB system will be able to do once e-invoicing has been fully implemented. Something similar to the current situation whereby your SOXO amount actually comes out automatically on your tax returns because they have linked it with the Perkesos system. Okay, so that's why this classification code is important. If let's say you key in the wrong classification code, for the business it's a non-compliance because your e-invoicing is wrong. For the taxpayer, then it might not come out on their tax returns. But even though there's an automated system to recognize all these expenses to claim for tax relief, taxpayer is still required to keep a copy of the visual presentation of the e-invoicing if let's say they are audited to substantiate the tax relief claims, right? So these are the classification codes, and we'll move on to the next slide. Okay, this slide is on transactional e-invoice versus consolidated e-invoice. So for businesses, there are two types of e-invoice that you can provide, and it depends on whether the buyer requires an e-invoice. So I've already mentioned, a buyer would require e-invoice only if they need the e-invoice to substantiate their transaction for tax purposes, right? So for businesses, it's basically businesses automatically they will need e-invoicing because they need it for tax deduction or capital allowance claims. But for personal consumers or individuals like us, we will only need an e-invoice when we want to claim that specific transaction for tax relief claims, right? So there's two. So when it comes to e-invoice implementation, if your business is a B2B business, business to business model, or your transactions are mostly B2B, then you'll probably need to create a transactional e-invoice for each transaction that you sell to another business. But if your business is majority or a lot of it is B2C, business to consumers, for example, Watsons or used to call it Tesco, now it's called Tesco or Aeon. If you go to their store now and you let's say you go to Watsons now today, or Popular Bookstore, you go to their store today, when you purchase something, they will still issue you with a commercial invoice, like what you are receiving prior to e-invoice implementation, right? But there's an additional thing. If you go to their store, and if you notice at the counter, they have actually provided a barcode, a QR code for you to scan if you want to request for e-invoice. So if you need the e-invoice for that particular transaction, you scan the QR code at their counter, or some businesses also include the QR code onto the e-invoice into the commercial invoice that they've provided to you. So you basically scan the QR code, fill up your details, provide your details to them, and then they can create an e-invoice for you. So on this slide, you can see the difference between the two. So if the buyer requires an e-invoice, then you go under scenario 1, which is a transactional e-invoice. Supplier obtain the buyer's details, which most businesses now are using QR code, post-transaction model. So once you purchase, you get a commercial invoice. Then if you need an e-invoice, then you scan the QR code to provide your information to the supplier. Supplier then uses the information, issues and validates the e-invoice with IRB. Once it's created, the supplier can share the validated e-invoice or the visual representation to the buyer. The buyer may scan the QR code to view the e-invoice validity. This is where the anti-tampering comes into play, because once you scan the e-invoice, the QR code on the e-invoice, you can actually check whether it's a validated e-invoice. So once you've confirmed that once the buyer confirmed that it's a validated e-invoice, then the buyer can confidently use the e-invoice to substantiate the transaction for tax purposes. Under scenario 2, consolidated e-invoice, if the buyer does not require e-invoice, so like I mentioned, the supplier issued a normal receipt to buyer. At the end of the month, the supplier consolidate all these receipts onto a consolidated e-invoice and submits it to the IB for validation to record down the revenue for that month based on the consolidated e-invoice. Right? For transactional e-invoice, there is no deadline, but for consolidated e-invoice, there's a deadline for submission to IRB, which is within 7 days after the month end. So for example, if you want to do a consolidated e-invoice for the month of September, you have until 7 October to send the consolidated e-invoice to IRB's website for validation. But we want to highlight, or you need to take note that specific transactions are not allowed for consolidated e-invoice, which are these industries basically. It's the automotive industry, sales of motor vehicles, aviation, sales of flight tickets and private charter, luxury goods and jewelry. This one is currently still pending details for IRB. There's some discussion ongoing between the industry players with Ministry of Finance and IRB. The construction industry, the construction materials industry, licensed betting and gaming, and payments to agents, dealers, and distributors. So if you notice from these 7 industries that are not allowed to issue consolidated e-invoice, one key point that we can see from these industries are that they are all high-value industries. So like motor vehicles are high-value products, flight tickets, construction, luxury goods and jewelry are all high-value products. So that's why I think IRB is actually trying to use e-invoicing to also highlight taxpayers that are spending huge amounts of money, so that they can identify these taxpayers and compare against the taxpayers' declared income on their tax returns. So for example, if let's say, just for example, maybe for example, if let's say I take myself as an example, maybe let's say for the year, for example, for the year I earn 50,000 ringgit of the income which I report to IRB. So I reported 50,000 ringgit worth of taxable income to IRB for the year. But throughout the year, IRB can pick up from the e-invoicing data that, okay, maybe I bought a Ferrari that's worth about maybe for example 1 million ringgit. So IRB can pick this up in the future, whereby I see, okay, this taxpayer purchased a 1 million ringgit Ferrari, but the past 5 years his declared income in his tax returns consistently only 50,000 ringgit per year. Then this obviously will be a red flag for IRB, as you can obviously see that how can a person that's only earning 50,000 ringgit per year afford to purchase a motor vehicle, a Ferrari that's worth 1 million ringgit, right? So then this will be a trigger point for IRB to approach the taxpayer to conduct an audit to find out whether, of course, there are certain situations where the taxpayer might be able to afford that 1 million ringgit vehicle. For example, let's say he received inheritance or whatever, but at least it will trigger IRB to conduct an audit to find out more details how or where his source of income is from, that he's able to afford these kind of products, right? So this is one of the ways that IRB is trying to increase the tax compliance rate in the country. For the construction and construction materials industry, these are well-known industries whereby there's always the industry players are always playing around with their income and expenses to reduce the taxes. So IRB is taking this opportunity to use e-invoicing to catch these non-compliant taxpayers. And then license betting and gaming is also another high-value industry. But the last one, payments, agents, dealers, and distributors, this has been a long-standing issue for IRB, I would say. Because why we call it issue is because I think IRB has realized that a lot of these agents, dealers, and distributors do not declare their full income that they obtain. So in the past, there's the CP57 that you're required to provide to the dealers. The company that pays the commission to these agents, dealers, distributors need to prepare the CP57 and provide to them for them to declare their income. But of course, this CP57 is only between the company and the taxpayer or the agent. IRB is not able to pick it up. So only if they conduct an audit on the company or the agent, then they are able to see the CP57 to determine the actual or to see the actual income. So then there's still a lot of leakages from tax payments or tax compliance from these agents, dealers, and distributors. So a few years ago, they introduced the 2% withholding tax for payments to agents, dealers, and distributors. But there was a threshold to it, which is this 2% withholding tax for the payments to these agents, dealers, and distributors are only applicable if these agents, dealers, and distributors generate 100,000 ringgit or more per year, right? So then what happened was, the agents, dealers, distributors, then they ensured that their yearly income is less than 100,000 ringgit, 95,000 ringgit, 96,000 ringgit, or so on and so forth. So they are not impacted by this withholding tax. So again, IRB, most of these agents drop out from the net. So IRB cannot catch them. So now when they introduce e-invoicing, they choose to put this as a transaction that is not allowed for consolidated e-invoice. So if it's not allowed for consolidated e-invoice, means any transaction to this group of people, there needs to be issued an e-invoice, which we'll talk about later on when we come to the self-built e-invoice. Okay, so these are the basic info or the general background on why these 7 industries are not allowed to go under consolidated e-invoice. Okay, then here we have a look at the sample of an e-invoice, which is obtained from the guidelines, basically. The key areas that you want to highlight to participants here today is here we have the unique identifier number, once the e-invoice is validated, this is a UI. We call it UIN, unique identifier number. UIN will be generated by IB and given to the supplier. This UIN is specific to each e-invoice. There will not be any two e-invoice that has the same unique identifier number. So it's a specific UIN for each e-invoice. Then on the left-hand side, you can see all the supplier's details, the buyer's details, classification code, like I mentioned, description, unit price, and the product details, so on and so forth. Bottom left-hand corner, you have the digital signature, the date and time of validation. This is also important, and also the QR code, which I've talked about, right? This is actually an example of e-invoice in PDF format where the buyer's TIN is not provided. So this is a general TIN number ending 010 in order to successfully validate the e-invoice. So this is a sample of a consolidated e-invoice. So the UIN is there, the digital signature, the details all there, the QR code is there, but the difference is here under buyer's TIN is a general code ending 010 and the buyer's name is general public. All the other information is not applicable, right? Because under consolidated e-invoice, you do not have to display the details of the buyer. So then under the description, you can basically just list down the receipt numbers throughout the month which you are putting under this consolidated e-invoice. So there are no details on the products itself or the services itself, right? And then there's also the QR code which you can scan. So for consolidated e-invoice is basically for the purposes of the business to keep for themselves only as a proof of income. Consolidated e-invoice does not need to be shared with the buyer. Right, and here we have the sample or the example of what you will see if you scan the QR code. If you scan a QR code, so for example, if you go to Watson's today, you purchase something, you request for e-invoice, they'll provide you the visual representation of validated e-invoice. So this will be the details that you see on your phone once you scan the QR code. So there's the document UID, internal ID, document type, supplier name, the details of the processing, details of the issuance, the buyer's name, and of course the most important one is the status. So this one is the most important because it shows it's validated. Okay, so this is just a sample for sharing today. Next, we'll look at the overview of methods for suppliers to issue e-invoice to buyers. So there are multiple ways where businesses can choose in how they want to provide e-invoice to their buyers. So there's the first way is to request on the spot. So for request on the spot, the business need to either use an online platform, retail web or mobile app, point of sale system, whereby your point of sale itself can generate the invoice, or using the MyInvoice mobile app, right? But this MyInvoice mobile app has not yet been launched. IRB has announced, or IRB has informed the public that they are targeting by end of the year to launch this MyInvoice mobile app. This is to ease those businesses to be able to implement e-invoicing, right? And the next one is a post-transaction request, where a buyer makes a purchase and did not request e-invoice but later on want to request. This can be done via online platform, retail web portal or mobile app. So post-transaction request is like what we have talked about Watson's, Popular, Tesco, Aeon, so on and so forth. Whereby if you are using an online platform, so you scan the QR code, then you can request for e-invoice. Sorry, Amanda, can I confirm? Can you all hear me? I think someone said there's no sound.
Yeah, it's working. It's working.
Okay.
You may continue. Thank you.
Thanks. Yeah. So these are the various avenues where business can issue e-invoice, which we'll look at in more detail. So option one, through the online platform, retail web portal, or mobile app. So in this example, which is from IB's guidelines as well, if you drive to a petrol station, you purchase the petrol, you pay the petrol with retailer app. If you need an e-invoice, you select that you need e-invoice, you provide under item 3, you provide your details. The system the retail app, the business's system then pushes it for validation to IB side. IB validates, send back, then you can share, the business can share the e-invoice to the buyer. If you don't need, then the petrol station will just issue you a normal receipt, which is what you're receiving today. And then the petrol station will do a consolidated e-invoice at the end of the month. So this is the first option. The next option is through the POS system. So if you go to buy groceries at let's say Aeon, you go to Aeon to buy groceries. At the system itself, the cashier requests for your details. You key in the details in the POS system itself. The POS system pushes the information to IB system for validation. IB validate, come back, then the POS system can print out the e-invoice for the purchaser, for the buyer. Why most retailers are not using option 2 is because this will create a queue at their POS system, at their stores. So you can, here in the example, you say IB has mentioned less than 60 seconds for the cashier to key in the details into the post. But in fact, it takes more than that. And also IB said it's validation within 2 seconds. So here you're talking about 1.5 minutes to create the validated e-invoice. But in reality, it does not always work like that. Because one, at stage 2, when the cashier needs the information from the buyer, one is the buyer might need to locate their information. They need to locate the information and provide the information, then the cashier needs to key in the information. Key in wrongly, just for example, so the key in probably take more than a minute. Once they key in, for example, let's say the cashier or the buyer key in the wrong details, their IC number is one of the digits is wrong. Push it to IB system, IRG reject. Then the cashier will then need to check where's the information that's wrong. Need to correct that one, and then for the post system to push it again to IB system. So all these delays or all these real situation delays will create a long queue. So therefore, all these retailers, if you go to like Watson's, My News, the ones that I know is Popular Bookstore, Watson's, Aeon, Aeon, Tesco, which has been renamed now, and Family Mart, all of them are using the fourth option, which is post-transaction request. So for businesses that have high volume of transactions, it's usually not feasible to go under option 2 for that reasons, for the queue. So then we have option 3, issues processed through MyInvoice mobile. So buyer comes to the store, store owner key in the details into the MyInvoice mobile app, push the information to IB system come back validated, provide the validated e-invoice to the buyer. So this MyInvoice mobile app is a cost-efficient method for businesses to use to be in compliance with e-invoicing implementation. Okay, so this is the one that I mentioned, that this MyInvoice mobile app, the IRB is still in the process of creating this app. They have targeted by end of the year to launch the app for businesses to use. Then we come to option 4, which is the post-transaction request, which the one that I'm talking about. So the buyer goes to the shop, buys the product. Once they buy, the buyer will receive a commercial invoice or receipt, which is what you're receiving today. Then if you need the e-invoice, you go into their website, or you go into the business's website, or you scan their QR code, provide your information. The supplier collect all this information, create the e-invoice, send it to IB system for validation, come back, then they'll email to the buyer the visual representation of the validated e-invoice. So this is a post-transaction request, which I think almost majority of the retailers are currently adopting. Okay, so that's the 4 options to create e-invoice. So basically that has covered most of the background information about e-invoicing. Next, we look about the implementation issues. So for all businesses, these are the general implementation issues that we foresee for all businesses. So these are the points that need to be considered. So the first is the document type to issue. So there's 5 types of documents under e-invoicing. There's an e-invoice, there's a consolidated e-invoice, debit note, credit note, and refund note, which is I think invoice, debit note, credit note is very common. I think most businesses know about it. So the new thing is the consolidated e-invoice, which I've talked about, as well as the refund note, which I'll talk about later. Then the next area that businesses need to look at is response handling. So for starters, is the validation status. You keep pushing e-invoice to IRB system for validation. The business needs to be able to keep track what has been validated, what has been rejected, has been not successfully validated. So those that are not successfully validated, which comes under error message. So those that receive error message that are not successfully validated, someone in the business needs to be able to rectify the errors and then resubmit for validation. Then on top of that, there's the 3 days or the 72 hours cancellation or rejection period. So the business needs to have someone that is able to respond to all these issues, validation status, error message, cancellation or rejection applications. Then there's special transactions. So certain transactions need special attention, like self-bill, foreign income, reimbursements, etc. And then there's also the list of exemptions. So you have the government, state government, employment income exempted, as well as like I mentioned, the MSMEs, which includes businesses with the annual turnover of less than 150,000 ringgit. They are exempted. So how you want to account for them? So these are the general ones. So the next we look at disbursement versus reimbursement. Why there's a distinction between the two, or why you need to know the distinction between the two, is that disbursement is not required for e-invoice, reimbursement is required for e-invoice. This is similar to something that was adopted under GST era, right? So disbursement is basically out-of-pocket expenses incurred by the buyer but paid by the supplier on his behalf, where e-invoice is not required as the supplier is only acting as a payment agent. The buyer can use the e-invoice issue is named by ultimate supplier as proof of expense. So one example of disbursement is, let's say, for Crowe's clients, if we go to the land office to do a land search for our client, when we do the land search at the land office will issue their invoice in the name of our customer because they are the ones that are using the information. But of course, since we are there, we need to make payment before the land office can release the information to us. So we will usually make payment first, although the invoice is issued in the customer's name, right? So this is a disbursement. The customer already has an invoice in their name. We just make payment on behalf, and then later on we collect back from the customer. So in this case, e-invoicing is not required because the customer already has invoice under their name, which is their proof of expense, right? This is different from reimbursement, which is reimbursement is out-of-pocket expenses incurred by the supplier on behalf of the buyer. This case, e-invoice is required. The supplier needs to present reimbursement as a separate line item in the e-invoice, and the buyer will use this e-invoice as proof of expense. So for example, again, Crowe, when we bill our clients, we have certain reimbursement costs, overhead costs such as telephone charges or stationery charges. This will need to be displayed in your e-invoice, and this needs to be charged out in the e-invoice as a separate line item. Okay, so this is a difference between disbursement and reimbursement. Other points of consideration: proof of expense. How a company wants to ensure that they get e-invoice for all their transactions as a proof of expense. For self-bill e-invoice, they need to have a staff employee which is on hand to track those expenses that are required to create a self-bill e-invoice. And then for staff claims, certain staff claims are under there's conditional exceptions, especially for those that are stated in the HR policy. Okay, so here we have the list of self-bill e-invoice. This is a payments agents, dealers, and distributors, goods sold or services rendered by foreign suppliers, acquisition of goods or services from individual taxpayers not conducting a business, e-commerce transactions, profit distributions, payout to all betting and gaming winners, payment of credit to taxpayers recorded in statement, interest payments. So I wouldn't go through all, but the ones that usually come up for most of our clients are, like I mentioned, payment agents to dealers, payments to agents, dealers, distributors. This is one of the areas where IB wants to catch these agents, dealers, distributors. So instead of requiring the agents to issue an e-invoice, the company that's paying these agents need to issue a self-billed e-invoice. In a way, the company that making the payment needs to declare the income for the agent. And then once they created the self-billed e-invoice, they give this self-billed e-invoice to the agent. Goods sold or item B and item C, goods sold or services rendered by a foreign supplier, as well as individual taxpayers not conducting a business. Basically, these two groups of people doesn't fall under e-invoicing, because they are one, if the foreigner, they're not under our laws. Individual taxpayer not conducting a business is not required to comply with e-invoicing. So in order for the business that makes payment to this group of people to have a proof of expense, the business needs to issue a self-billed e-invoice. And then for e-commerce, this works from the point of the merchant itself. So for example, if Shopee, if I put my product up for sale on Shopee, then I sell it through Shopee, instead of me issuing an e-invoice to Shopee, Shopee is required to issue a self-billed e-invoice to me. So Shopee will declare my income on their platform for me. I get the self-billed e-invoice, then I need to declare this under my income tax. So these are the examples of self-billed e-invoice. This is a sample of a self-billed e-invoice. Basically, more or less the same. Everything is the same. Suppliers details, buyers details. UIN is there. The digital signature, all the validation details are all there. So next, we look at staff claims. So general rule is that employees are required to request for the e-invoice to be issued to the company for the expenses that they have incurred. But there's a concession that allows the e-invoice issued under the name of the employee, similar like GST era. So for example, if I want to claim optical claims, I go to the optical store, I buy spectacles, I can request the e-invoice either in my name or the company's name. That is sufficient for the company to claim tax deduction. And self-billed e-invoice is not required for payments made to foreign suppliers or expenses incurred overseas. So this is only for staff claims. Yeah. So if let's say, for example, if I go to Singapore for a business trip, I incur certain expenses like maybe I took a Grab car there. So I don't need to the company doesn't need to do a self-billed e-invoice. With the receipt that the Singapore Grab company provide to me, that is sufficient for the company to claim these expenses. Of course, with the concession, is provided that there are conditions. The condition is that the perquisites of benefits is clearly stated in the employer's policy, or the employer is able to prove that the employer is acting on the employer's behalf in incurring the expenses. For item 2, we do not foresee it's an issue because these are business expenses. Of course, even today, even without e-invoicing, the business will only want to pay their employees for expenses that they have incurred for the business purpose. I believe no business will pay out staff claims whereby the employee is actually not using that expenses for the business itself. Okay. Okay, then we have the e-invoicing issues faced by SMEs around the world in terms of common problems. So one of the common problems is the complexity of the new e-invoicing system, and updates to e-invoicing regulations. Complexity is one thing. As we know, IRB is it's a new thing, so IRB is constantly updating their guidelines. So you, on one hand, it's a complex thing to implement. On the other hand, you need to keep up to date with all these changes. The second problem that we usually see is resistance from business, particularly SME, due to perceived cost and complexity. So this is another real issue faced by SMEs. You want to implement e-invoice, you need to incur systems costs. How much the systems cost depending on the vendor that you all choose, and depending on the complexity of how you want to, the complexity of your business itself, whether the system can cater to your business complexity. So all these costs and complexity might make SMEs not comfortable to implement e-invoicing. The next one is technical challenges relating to system integration, data security, and system downtime. So, of course, with any system, there are potential for downtime, there are potential for security breaches, data security breach, and all that. So this is one thing that SMEs usually need to think before they implement. Then limited awareness and readiness among SMEs need for extensive training, support, and public awareness campaigns. So that's why we are here today. We are here to provide businesses with the information for e-invoicing so that they know where they stand currently and what they need to do to implement e-invoicing. Positive outcomes will be improved transparency and traceability of transactions. So once you implement e-invoice, you should improve the transparency, or you should be able to identify your transactions more clearly, improve tax compliance and increase tax revenue, substantial reduction in tax fraud and evasion, and increase efficiency in tax collection and audit processes. This is where IB comes in. This is their target, or this is their goal from the implementation of e-invoicing. Enhance efficiency and accuracy in processing invoices for SMEs, because there's a system in place, so it should enhance the accuracy of the invoices. Reduce administrative burden and paper for businesses. Better data quality and analytics capabilities for government policy making and business decision. So this is where the government comes in for invoicing. They'll collect all this data. They'll be able to use this data to make better decisions for the country as a whole. Negative outcomes, high initial compliance and adaptation costs for businesses. So just like I mentioned, you need to incur costs for the system and so on and so forth. Ongoing need for technical support system updates and regulatory adjustments. So you need to keep up to date, which requires time and cost to make sure your system is up to date. Potential disruption to business operations during transition period, which we have seen for some of our customers, because you need to transition your system and so on and so forth. Technical challenges related to system integration and data security. This, of course, is a common issue with any implementation or any system-related or IT-related items. So factors for successful implementation: human. You need the people to implement and run the project. So no matter how small the business is, you definitely need at least one person to run the project. In machine IT systems, you need someone, or you can outsource to a vendor to provide the system to you. For example, it would be Q&A. Materials, data to operate the system, you need in-house staff to be able to do that. The method to implement, the technical knowledge about e-invoicing and how to run the e-invoice, you need in-house staff to do it, or you can outsource it. Money, the investment costs, definitely you need to incur costs for investing on the systems and the training, whatnot, but this can be minimized to a certain degree by choosing the correct vendors. Management, overall driver for a project, definitely need, but you can outsource to a certain extent as well. Like, for example, that's where Crowe comes in. If we are engaged to help you with the e-invoicing implementation, we'll actually walk you through the whole implementation process. So e-invoice requirements by SMEs, typical nature of SMEs, less complicated business model, less demanding requirements, smaller volume of transactions, less specialized requirements, unlike banks, insurance companies, stockbrokers. That is for sure. SMEs will have a less complex business compared to the bigger businesses. But it need to be balanced by the major needs of the SMEs regarding e-invoice, which is a cheaper or more cost-efficient price of implementation, effective and cheap software system, limited manpower to implement e-invoicing, and cheap ongoing maintenance. So these are what SMEs required by us consultants, as well as the software providers such as Q&E. Why government implement e-invoicing? This is basically to tackle the shadow economy. I will not go through this in detail. It's basically to catch these non-registered businesses, catch under-reporting of business income, catch unreported sources of income, so on and so forth. So increase overall tax compliance. So the IRB will be able to obtain all the revenue, expenses, details of data of the taxpayers. Profit margin, IRB can identify profit margin trend. This is for transfer pricing more. Is benchmarking, withholding tax compliance, because they will be able to track all these purchase of goods or purchase of services or transactions from overseas vendors. And indirect tax compliance, like I mentioned earlier, this is where customs come in. They'll be able to see whether you're in compliance with SST and so on and so forth. I won't go through this. So the impact of e-invoicing will be they'll be able to catch all these fictitious hidden transactions, last minute adjustments, profit shifting within group companies, business expenses where deductions will be claimed more than once. All this will be reduced once e-invoice is implemented. So in summary, who are being affected by e-invoicing? It's basically all individuals and legal entities that are doing business will be required to implement e-invoice. When to implement e-invoice is being done, the implementation is being done in phases. Phase 1, batch 1, which is effective the 1st August 2024, which is for businesses with more than 100 million turnover. Batch 2 is for businesses with turnover between 25 million to 100 million ringgit, which is due to be to implement on 1st Jan 2025, and for all other businesses by 1st July 2025. What transactions impacted by e-invoicing? We have any commercial activities or business activities, be it B2B, B2C, and B2G transactions, including special transactions. Why e-invoicing is important? It will be your proof of income and your proof of expense in the future. What to take note? Sharing of documents with buyers upon validation, error messages for IIB, rejection by buyer or cancellation by seller within 72 hours. So as I mentioned, the company or the business will need a staff to handle all these issues or take note of all these issues. When to submit for validation, IIB has mentioned is follow normal practice. Whenever you issue invoice now, instead of issue invoice in the future, you need to issue invoice. Validation is done in real time. From my experience, is the validation is being able to be done within 5 minutes. How to submit for validation? You can submit to IIB's My Invoice system either via the My Invoice portal or API direct integration or source to service providers, which I think Q&E will go into more details in their presentation later. What type of documents to take note for e-invoicing? So there's the e-invoice, self-issued e-invoice, self-billed e-invoice, consolidated e-invoice, debit note, credit note, refund note. Okay, so this is a summary of the e-invoice. And here we have listed down the key deadlines that you need to take note of. For transactional e-invoice, there's no deadline set by IIB, but it can be rejected or cancelled within 72 hours. For self-billed e-invoice, for purchases from foreign suppliers of goods, is by the end of the following month of custom clearance. So if let's say today you purchase goods from overseas, today you get the customs clearance. By the end of October, you need to issue the self-billed e-invoice. For self-billed e-invoice for purchase of services, is by the end of the following month upon payment made or receipt of the invoice of foreign supplier, whichever is earlier. So if today I purchase services from a Singapore company, they issue me the invoice today, I need to create a self-billed e-invoice by the end of October as well. Self-billed invoices for other purchases or payments to individuals not conducting business, there's no deadline set by IIB. Consolidated e-invoice, you need to be validated or created by within 7 days after the end of the month. So if I want to consolidate September's consolidated e-invoice, I need to do it by 7 October. Okay, so for e-invoice is basically a collaboration for all departments. It's not just the finance department or the IT department. You need the IT department, all the people in the company, the finance, admin, legal, HR, sales, marketing, operations, procurement. All these people, all these departments will be impacted by e-invoicing. They will need to collaborate together in order for smooth implementation of e-invoicing for the company. So how can Crowe help you? We can actually assist you with the implementation of e-invoicing. We are doing it in 3 phases. Phase 1, which is a discovery stage, whereby we go in, we understand the business, and we come up with a gap analysis and propose implementation plan. Then we move on to phase 2, which is the implementation stage, whereby we'll walk you or guide you through the implementation for you to close up all these gaps that we have identified. And then once this is done, phase 3 is the review stage, whereby we conduct a readiness assessment, user acceptance test, and trial run to ensure that the system that you've put in place is able to generate the e-invoicing properly. And also, of course, we conclude that with a staff manual and training for the staff. On top of that, so there's the in-house training, which we provide under phase 1. I won't go through in detail, but of course, this in-house training will be provided to all these departments. Other services, we give you through an initial assessment, the gap analysis, a readiness assessment before go live, and we also provide a retainer program after you have gone live if you need our ongoing assistance after implementation. And finally, on top of the consultancy services for e-invoicing implementation, we have this outsourced accounting services, whereby if you need to outsource your e-invoicing implementation, or you need to outsource e-invoicing creation for your business ongoing, we can actually help you to automate and streamline invoicing with our e-invoice services, ensuring accurate, compliant invoices and real-time tracking, reduce errors, speed up payments, and enhance transparency. So instead of, if you do not want to implement e-invoicing by yourself in your in-house, you can actually approach us as an outsourcing company to help you to generate e-invoicing for you. This is something that our business outsourcing team can also provide to you as a service. So that concludes my session for today. Thank you for everyone for listening to this 1 hour of my presentation. I will pass it back to you, Amanda. Thank you.
Yeah, all right. So thank you, Mr. Michael, for the insightful presentation. I'm sure everybody has found it incredibly valuable. So before we take a short 5 minutes break to stretch, right? While we are on our short break, don't forget about the lucky draw. So one lucky draw winner will get 12 months free subscription to the Q&A AI Cloud Accounting Professional Plan. So all you need to do is just like and share our Facebook post about today's webinar, and it only takes up about a minute. So you could walk away with an amazing prize. So take a moment now during the break to join in. So don't miss your chance. We'll be back shortly, and I can't wait to see who will win the prize. All right, welcome back everyone. I hope you guys had a nice little break to recharge. Now let's dive back into the webinar. Up next, we have Ms. Shirley Chong, E-Invoice Implementation Manager at Q&E Optimum Syndrome Berhad. Q&E has been a pioneering force in Southeast Asia for almost over 2 decades, known for its innovative accounting solutions, including the region's first AI accounting solution. Their edge products such as Q&E AI Cloud Accounting and Q&E Cloud Payroll demonstrates their commitment to the technological advancement and adaptability across diverse market. So Ms. Shirley, who has been an integral part of Q&E software for the past few years, specialized in Q&E Cloud Payroll and e-invoicing. Her expertise and passion for technology makes her a valuable asset to the team. Ms. Shirley's deep understanding of these areas will provide insightful guidance on managing e-invoice solution, helping us to navigate these essential aspects with ease. So let's warmly welcome Ms. Shirley.
Hello, good afternoon, everyone. So how's everyone doing? Are you guys have absorbed a lot of knowledge from our tax associate director, Mr. Michael? I believe some of his content that actually associates with your SMEs, how are you going to manage e-invoice, how are you going to implement e-invoice is a very valuable knowledge that every businesses should have, especially when you start to planning e-invoice. How are you going to start? This is a very good start that we can actually look for professional advisors and also professional helps, especially from Crowe Malaysia. So I believe they are because from what we listen to the presentation, there are a lot of numbers, and then when you hear a lot of numbers, then you know that the persons that talks about the numbers, they are very good. They are good. They know their numbers. Definitely, they will know yours also when they are actually helping you. So if you need help from as a professional helps from our accountants on e-invoice, feel free to contact them. I think they are very happy to help also. All right, so let's move on to with my presentation today. So and today I think we will just going through things about the invoices. So let me just have a little reminder here. We have a lucky draw. So if you want to win these big prizes worth $1,560 worth of 12-month subscription, feel free to join. I believe you know how it goes. And here, let's just start it without further ado. All right, so what I will be sharing today, our topic today will be e-invoice automation with AI and cloud. So before I actually goes into the system, so let me just walk you through what is the workflow of e-invoicing with my invoice with LHDM. So first of all, look at the whole diagram. There are 6 steps that this is actually from my invoice portal. This is what they shared, not really for my own portal, but it's shared by LHDM my invoice. This is the steps and also what are the things will happen after you submit e-invoice. But we don't go very detailed into it. We just go for the what is important. So let's see. The first thing. All right. So once you click on the submit e-invoice button and then you submit your first e-invoice to my invoice portal, what will happen after that? So upon validation, okay. So when you submit, there will be only 2 results that will be coming back. Either it's valid or invalid. So if it's invalid, of course, like what Michael has shared, you resubmit again. You edit your data, you look at the error message received from IRBM, you edit your transaction, and then you resubmit again. That's all. But if it's already valid, what is your obligation? So from what was shared by my invoice and also my invoice, actually my invoice, they will actually notify both supplier and buyers. But currently, as what we know, the notification done by RBM is more to a collection of a summarized collection of what you have received within a certain period. For example, within the last 1 hour, how many valid e-invoices you have received from your supplier and so on. So this is how they do the notification now, but we believe that in future they will keep developing their My Invoice portal to actually cater for every transaction. So we'll just wait and see their next development. And then for supplier side, if you are the one that is issuing the e-invoice, not just supplier lah, if you are actually the customer but you are issuing self-bill, you will also receive this information. So the first thing, of course, is unique identifier number, which is the unique ID of each of your transaction that you submitted to IRBM. You will get one unique identifier number back from that was assigned by HDM. And then the date and time of validation and also a validation link will be sent back to you. It will be feedback to your system. It means that the system should be able to receive all this information. And then what are you going to do next? Okay. So this is one of the samples that you will see what is the QR code will be looks like after it's validated. So you see a QR code here, and then clicking on the QR code, this is what you will see. This is the My Invoice Portal validation link. All right. So once you receive all this information, you have the obligation to share the e-invoice to your buyers. So if you are self-billing, you are supposed to share it back to your supplier. So the obligation works two ways. Whenever you are the one that is issuing the e-invoice, you are supposed to share back the e-invoice with the QR code embedded in your invoice format, and then share it with your customers or with your self-bill supplier. Right. So this is one of the example that is in that is already done in our system. You can see a very big QR code there, and then you can actually see that the formats we didn't modify much. So according to IRBM, they are not you are still free to use your invoice format at the moment. So the only requirement in your invoice format is that you must have this QR code with you in this invoice format. So this is actually one of the requirement that is required by IRBM. So unless you're actually under SST, you're actually one of the SST registrants, you are supposed to also comply with what SST requires for their tax invoice. Then you need to comply both, not just for e-invoice, and then you just ignore whatever that is required by SST. All right. So other than that, as mentioned by Michael, 72 hours, you can cancel or reject the e-invoice that you receive or issue. So each of the party, buyers or supplier, they have their role. And then for buyers, if you are the customer side, you can submit a rejection request with a valid reason, and then you must wait for your supplier to actually go and cancel the e-invoice. So this is actually not just for buyers and sellers. So if you are the issuer, for example, like self-bill, you will be the customer. But then because the e-invoice is actually issued by you, you have the right to cancel the self-bill e-invoice. And so this is more to who is the issuer actually. And then for supplier side, they can just cancel the e-invoice, but then of course they need to provide a valid reason as well. All right. So other than that, so that's the basically the overall flow of what will happen after you actually receive you submit an e-invoice or you receive an e-invoice. What are the things that you can do? All right. So going back to system, how will system is able to help you with the preparation of e-invoicing? So unlike our partner, Mr. Michael and Crowe, they will provide you a step-by-step. They will hand-holding you, tell you what you are supposed to do when you actually implement the e-invoice. But then in our role, because we are software providers, we are actually accounting system software provider, we will actually help you to comply with what is supposed you can do. What are the things that you can do during e-invoice implementation? So there will be also a step-by-step guideline in our system, but then it's more to you need to self-learn also because it's a system. So that's why we actually recommend that you go if you do not have anyone that is dedicated in your businesses, or you have a professional knowledge about e-invoice, we really recommend that you go for a professional advisors. So in these implementation stages, and at least everything, your SOP, your operation, what you're supposed to know, each of the department, what is their role. Once you have everything worked out, it will be a very smooth process for you for e-invoicing. All right, so under preparation, what we have prepared for our users, this is actually the required field that is required for suppliers and also buyers. So that this is only part of the required information before you actually go and submit e-invoice. So for suppliers, of course, is ourselves. Buyers is your customer. So what we prepare for you is before you actually submit any e-invoices, before you actually connect the system with my invoice server, we will actually ensure that all your information are filled out properly in the company profile. So you can see that under the slide here, we can see credentials. Before you submit, system will actually stop you if your information is incomplete. So this is how we help you to actually, you have a little leash here and there, helping you to actually onboard your whole database to submit to in e-invoice. Other than that, of course, your information, everything that is required for as a supplier will be listed out. All right. Other than that, we also have as if you remember, we have a very important code. I think Michael spent quite some time there explaining about what each of these classification codes means for you. So how in our system we control this classification code is that we are using stock item. So within the stock item, you must assign a classification code for each of your item, making sure that the item are actually equipped with this classification code so that you don't miss out the code. And also from here, of course, we know that your stock item, there might be thousands, 2,000. How am I going to assign it one by one? So we also prepare a batch assign features that you can do things in a very short time. So like because the classification code currently is only until 45 only. So you can imagine that actually most of the stock items that our businesses is selling are actually not within the classification code. So one thing that you need to remember is that most of your products probably they'll be going to 022, which is others, what you are selling. If you're not breastfeeding equipment, if you're not computer, if you're not doing consolidated, then most probably a very big possibility that you will be using 022 most of the time. All right, so this is also why we have this feature so that you can actually batch assign all the item in your system. And then the next one, of course, once we have get ready ourselves, we get ready our stock item. Next up is our customer information. So we have this e-invoice advisor, which is also part of the batch assign is also under this feature here. The e-invoice advisor, what it can do, it helps you to filter out all your customer info, your customer's code, whether their information is completed or not. So if they are not, of course, when you issue e-invoice to them, definitely you cannot go through the validation. So in this case, we want to make sure that your customer accounts is also ready. So right now, so for customers, we also prepare what we call that features, what we call request customer info. So right now, before you, what would be the way or methods that you'll be using to actually gather all this customer tax information? I would imagine you'll probably request using emails or WhatsApp or Line or any other instant Telegram messaging apps that you have or that you are usually using to actually blast out the information that you require from your customer and then ask them to fill out the information from you, right? And then you'll be getting the information directly from where? From your WhatsApp, from your email. And if you know how to use Google Form, and of course, all the information will be going to a Google Sheet. All right, so what's the next step? You start to do data entry. So this will be a process where if you are using a manual way to actually gather all this information, these are the things you or your admin, they will need to go through that. You need to do verification. If there's duplication from information that you receive, what will happen, what is the things, you need to keep track and so on. So what we propose in our system here is that a features that collecting from a platform to platform, meaning that we are actually sending out we are actually sharing out a platform to your customers, inviting them to actually fill out their information directly into your system. So the info will be actually received instantly because this is why what our advantage is, because we are actually a cloud-based solution. So this is also why we are able to actually do this, meaning that because your system is always online, whenever your customer free, whenever your customer is free in the middle of the night, whenever during lunchtime, they can fill out the information and send it directly back into your system. So skipping all the data entry works, and all you need to do just verify the information. That's all. So in the feature is not it is actually everywhere in our system. You can request that direct in your customer maintenance. You can batch email them from the advisor. You can even put that into your quotation, your sales order, or sales invoice, even before you actually start e-invoicing. So the QR code will be provided there. All you need to do, just ask your customer or your prospects or your potential clients, ask them, can you help me fill out the information here so that I can issue you an e-invoice in future. So this is a very handy tools for our users that they can actually provide information from a lot of methods. So what they will be receiving is that a platform like this, all the required information of e-invoice will be listed out here so that they can fill up the information. And then once they submitted, you'll be receiving the information from here. But then, of course, we won't be changing your information without you knowing. You still have an acknowledgement process here. You must accept the changes, then only it will apply to all the transactions that you issue later on. All right, so this is some of the request customer info that we have. So it actually helps you to receive information instantly. And then all you or your admin need to do is just review, approve, that's all. It's a very minimal interruption to your daily operation. We don't want to burden you with all this information. All you need to do is just make sure that you just open up, this is a genuine data that you receive, then you can just proceed and accept the changes. And then it's actually saving all your time and resources. Because like what we mentioned, we wanted to make sure that e-invoice will not be a burden to your businesses, because we know that even for e-invoicing is a new thing. Learning new things takes time. And then if you have gone through the e-invoice guideline, you know that there are at least 200 pages there. So it takes time for you to learn. That's one thing, it's already burdening you. So during the operation, of course, we want to make it on top of your accounting daily tasks. So this is why we implement a lot of automation features in our system to help all our users. All right, so in terms of submission, what kind of submissions method or mechanism that we actually apply? So first of all, of course, in every single transaction that is e-invoice related, there will be a submit e-invoice button for you. Whenever you are ready, all your information are completed, just click on the submit e-invoice and then it can be submitted to IRBF directly. Then of course, we know that during your business operation, there will be a lot of different scenarios. That's why we come up with different validation controls for each of your transactions for different scenarios during the creation of e-invoice, or even during your business when you are doing business with other people. What are the things that might happen to your admin or you? All right, so there in our system, we actually prepared 4 types of validation control. They are draft or consolidated, they are e-invoice portal, full validation, and also exempted. So let's just go through that one by one. So the first one, draft consolidated, as the name suggested, is a draft is a draft validation method, meaning that in the system, we won't be running any validation checking on your transaction. Only those basic, for example, if you are issuing a sales invoice, there must be a customer code. Only those basic transaction, but excluding e-invoice information validation. So from here, you can still proceed with issuing normal invoices. They will still be posting to all the transactions you issue. And then after that, if you're not able to get the customer information, you're not able to proceed with a transactional, to issue a transactional e-invoice to your customer, what will you do after that? You go for consolidated. You yourself, you still need to submit e-invoice to record your sales, but we will use a different method. Instead of issuing a transactional e-invoice, we go for consolidated e-invoice. Why do we go for consolidated e-invoice? Because we do not have a complete information on our customer. That's why we go for consolidated. So here there will be two chances. Draft, of course, whenever if I am not able to complete key in all my transaction during that day, I can just save it as draft for the time being and then continue later on. So it actually works two ways. So it actually depends on how you want to utilize this validation method. Right, and then the second one is a very special one. We call it e-invoice portal. It doesn't sound like a validation control, but actually this is a validation control for that we specialize for features that we have. Later, I'll share with you what is the feature. So e-invoice portal, like the name mentioned, this is not my invoice portal. This is Q&E invoice portal. So what we actually prepare for our users is that during the e-invoice era, like what Michael was mentioning earlier, there will be certain methods of how people or businesses want to handle this e-invoice request from your customer. Especially, this is a common scenario where it will happen, especially for restaurants, where if you are doing businesses that is more to a B2C model, and then these are the things that will happen. People will come requesting e-invoice from you on and off, definitely. So for example, like e-invoice, I'm buying things, but then this is actually my company's amenities. So what am I going to do with that? If I'm using the normal receipt, I might not be able to claim it later on as a tax deductible expenses. So what should I do? Because this is the company expenses, normally the admin or the runner, they will go and request for an e-invoice instead of using the receipt. So in this case, what are the methods that they are going to use? So in our system here, this will be the user side. For the customer side, we'll share on that later. The user side, when the user actually issuing this transaction out, they can just issue as a normal transaction, normal invoice, normal debit note, normal credit note, and so on. But then what is the difference in between the draft and also e-invoice portal? E-invoice portal will make sure that all your classification codes are ready there. Supplier information, of course, is already ready in your company profile, but then it will also prepare you for your classification code, making sure every line item that you have equipped with a classification code. And then you send out you just share the normal QR, the normal, the normal invoice format to your customer. You can just tell them whenever you are ready, whenever you have the tax information, you just scan the QR code, request from there. And then from there, you can just submit the e-invoice without the customer having to contact you again, asking you, hey, can you help me issue my e-invoice? My receipt number is such. Okay, so this is a handy feature for those of you, if you are actually handling your business operation is very busy already, then you can just prepare this this feature or this facility for them, for your customer, those walk-ins and all, and then ask them whenever you need your e-invoice, just scan the QR code whenever you feel like, when you feel like to request for the e-invoice. So this is for e-invoice portal validation, making sure your information that is required from your side is completed. The only information that is lack of is the customer information, where it will be filled out by the customer itself when necessary. All right. So what happens if the customer did not request for the e-invoice at the end of the month? You do console. So this transaction will automatically goes to consolidated at the end of the month. All right. So full validation, the next validation control. This is like what the name suggested. Whenever you need to issue an invoice, all the information required by e-invoice is required before you are able to save. So what does this will apply to? But businesses that they have a very strict SOP on how they want to handle their invoice. They want to make sure that the invoices that they issue are all e-invoices. They use this control. And then after that, what are other scenarios that might apply to this? Those industry that is not allowed to do consolidated e-invoice. All right. So if you still remember, if you don't remember, then you can go back and view the video later on. There are 7 industry that is not allowed to issue consolidated e-invoice, even though they are doing business to consumer model type of business method. All right. So full validation, like what the name suggested, before you save, you must make sure that all your information are completed, including your customer's information. So these are the validation control that we have. And the last one is exempted. So exempted actually means that this is not an e-invoice. This transaction, I wanted to record that in my accounting system because basically we are still an accounting system. We are not an e-invoice system. So in order to have a very accurate financial reports, of course, we need to make sure that all our sales are recorded properly, all our expenses are recorded properly. So there will be some circumstances, for example, like e-commerce sales. If you are a merchant, but then you have a shop under Shopee, for example, and then Shopee during e-invoice era, they will be the one that will be submitting the e-invoice on your behalf. So in this case, you yourself, even though you are businesses, you are not required to actually submit another e-invoice for the sales you made on Shopee. So in this case, of course, e-invoice, you don't have any obligation there, but then you still need to record these sales in your accounting system. So this is where this exempted comes in handy. You just make sure that I just record the sales as how I usually done, but then I click on exempted so that it won't keep coming out asking me to submit for e-invoice later on. It'll be very annoying if it keeps coming out. All right, so the next solutions that I wanted to share with you is our e-invoice issuance portal. I think most of it I already shared that during the e-invoice portal validation. This is actually the same function, but then the validation control there is on the customer side, is the user side. What they can do to make sure that my customer will not ask me why there are no classification code, why the error message coming back, why there are no classification code on that, and so on. So here, the e-invoice issuance portal, before I really share the whole thing, let me just share you a story of Alan. Okay, so Alan here, during e-invoice era, everyone has started e-invoice already. This is on September 2025, next year. Maybe we go for more forward years. In March 2025, definitely after the concession period of 6 months, everyone is supposed to comply with e-invoice. When you go to shops like this, when they are actually facing all these walk-in customers, definitely they will ask you one thing: do you need an e-invoice or not for this purchase? So in this case, Alan, he said he don't know, because like what the story say is he's actually buying on behalf of his girlfriend. So he doesn't know what's the purpose of this laptop is for. So of course, Alan going back with the laptop, his girlfriend actually mentioned, this is actually for work. I'm actually buying and then I want to claim back for my company. So in this case, Alan, no choice. He have to go back to the shop again. So what happened? What will he see? If the shop is actually using a very manual way to actually allow the customers to request for e-invoice, most probably this is what they will see. A lot of people lining up requesting for e-invoice. They thought it's business. They have a very good business, or they are having promotion. No, no, no. They are actually all queuing up waiting for their e-invoices. So this is actually not what do you call that, rumors or a myth. This will actually happen. Why? Because even if you know that in Philippines, because we have another division in Philippines, they are actually running for e-invoice also, but then for them they haven't started yet. They're currently still in phase 1, but then they stop at this stage. I think they are still refining or fine-tuning their system. So for Philippines, how they actually handle this kind of tax invoices, normally this is what will happen. They open up another special counter just to handle e-invoice or the tax invoice in their sense, to handle this tax invoice request from their customer. So what we will be doing there, when we have our meal, we will actually, our boss, he will actually pay half an hour before we actually go out from the restaurant. Why? Because he knows that definitely there will be a queue waiting there. So at least half an hour he needs to be prepared to get, so that they can get this tax invoice. So this is actually a very truthful things that will happen in future. So of course people will not be happy. People lining up, they come in, they what they want to do, people come in to buy things. They want to make everything very fast. Time is money, time is gold. So we don't want to waste time queuing up just waiting for an e-invoice. All right. So what will others in what do you call that, the shops do? So currently what we have seen recently at 7-Eleven, Watson, they have started e-invoice already. So they did, like Michael's mentioned, Watson, they actually provide you with a link here. You can see that, get your e-invoice here. And also for 7-Eleven, they actually provide you with a QR code, a generic QR code. So what is this QR code will bring you? He will bring you to a link, and then he will request you to actually register. Register who are you first to be their members and so on. Then only after that you need to upload your receipts. You need to fill up the information and so on. So same goes with Watson. So this is what they actually requested. You are required to input their receipt number and what is the transaction date and so on. Then only you can request for the e-invoice. Okay, so this is one more thing that we will be mentioning about this is, once you actually submitted your information, you will not get the e-invoice directly. You will still need to wait for a period of time, maybe within half day, 1 day, or within 48 hours. So it actually depends on when they actually posted their transaction to my invoice. So from there, you still need to wait for a while. So what our solution actually provided, our Q&E e-invoice portal, is that we are also providing the similar method. We are providing you with a QR code, and all the customers need to do just fill up their information based on who are they. Are they claiming as a company? Are they claiming as an individual? You can choose whichever that is applicable to the customers, and then they can just request submit e-invoice there, and then download the e-invoice from the same link. So this is what we are actually providing. We won't ask them to actually fill up the information of the transaction and so on. So because each link actually connects to an individual transaction. So this is what it will be seeing. They can download the QR code. You can see that it's actually the same format that we actually share. So we'll be using the same format for even before you actually submit as an e-invoice, and after you submit as an e-invoice, only the information that is provided in the e-invoice and also in the normal invoice will be different, but then the format will be the same. All right, so for this method, how it applies to users is that the user can just provide you with a normal invoice and then just pass the normal invoice to the finance department, and then the finance department can actually just scan and update their information, claim their own e-invoice whenever they are free to do so. So this is, if you are the one that is actually using the feature, it will be a very minimal interruption to your operation. Like what we mentioned, this is our goal. We don't want the whole process to be a burden to your business. We want it to be as light as possible. And then so that's why we have this feature that we prepare a lot of automation that we do for our users. So their customers can request at their end. If the customer did not request, automatically it goes to Consolidated. And then the status will be auto updated into your system. It means what? It means whenever the customer walk in and then they request for e-invoice, they don't have to call you anymore. They will be handling their e-invoice by themselves using the invoices or the format that you provided to them. And then you don't really need to have an admin or a person to actually sitting there waiting for if anyone wants to request for e-invoice, and then she needs to go and type in all the information and then request for them. So this is one thing good about this. Of course, we have batch submission. If you still remember how many invoices or transactions we have for e-invoice. For income, we have invoice, debit note, credit note, refund note. For expenses, we have self-bill invoice, self-bill debit note, self-bill credit note, and self-bill refund notes. Total of at least 8 types of transactions. So here we just prepare you with an all-in-one screen, what we call an e-invoice power search. Everything will be listed out here. You do your inquiry here. You check your valid e-invoice here, or your invalid e-invoice here, or those pending e-invoice in this screen here also. So if you have pending e-invoice or invalid e-invoice, what are you supposed to do? Just going back to this screen, this tab, and then just submit that by batch. And that's all. One click, everything counting. Right? Of course, consolidated e-invoice is an easy task. Just select your date. What is the transaction date of this consolidated e-invoice you want to include? What are the transaction forms you want to include? And then just click, that's all. And then, of course, the consolidated e-invoice will be generated into a transaction. So within the transaction, you can see what are the transaction is included. Then, of course, we allow you to edit also. You can just remove anything that is not required. In this consolidated, you want to put this on hold first. You know that the customer is actually requesting for transactional e-invoice for this. You can remove this transaction from the listing here. All right, so one thing about consolidated e-invoice is that there is not just consolidated e-invoice, normal e-invoice, every documents that you submitted to IRBM, there is a limit of size. Okay, so you can see that this is actually from the guideline. What is the size limitation here? So what the IRBM actually they gave us a solution for that. So one of it is actually you can actually submit your consolidated e-invoice either by separate line items or by continuous receipt number. So what's the difference between these two? Is that when you submit your consolidated as a separate line item, you can see that the details here. Each line will be one invoice, will be one cash sales, will be one bill. So if you are choosing for continuous receipt number, it will help you to console everything together as a continuous receipt. If you can see that this is 43 to 44, and then 45 is not here. So it will continue again in the new line from 46 to 47. Then of course, all this the amount will be consolidated also. So this actually helps you to submit e-invoice in this sense. If you have thousands, 2,000-3,000 transactions per month, how are you going to make sure that it doesn't exceed the required maximum size of 300 KB per invoice. So one of the things that you can do is you choose for continuous receipt number. It will reduce the line. It will reduce the size also. So this is one thing that you can do, and then there will be other methods also, like you can ask us later also how you can actually reduce the size. Okay, so this is some of the submissions methods that we have for all our users. They can utilize it. This is all live in our Q&EI Cloud Accounting. If you are interested to know, and if you are the lucky winner that we have later on, you'll be able to experience all this within the system. All right, so what will be released soon is all these. These are some of the features that we'll be releasing later on. And what I wanted to emphasize here is about your expenses. So I'm not really sure what will be your thoughts about e-invoice expenses. What is your expenses? Because normally, other than self-bill, because self-bill is issued by ourselves as a customer, we issue an e-invoice on our supplier's behalf because they are not able to provide us with an e-invoice. So what about those normal purchases, normal expenses? That is where the e-invoice is actually issued by your supplier and not you. Do you think it is important to actually know what is whether the e-invoice that is submitted by your supplier is actually validated? I think this is one thing you need to take note, because there will be what do you call that? There is a possibility in future. RBM will go very strict on e-invoicing, even though the obligation, what they mentioned, that your obligation to issue e-invoice is actually on the issuer, not on the recipients. But then we don't know what will be the next phase of the application of the legislation of e-invoice in future. So what we actually, within this concept, what we are actually trying to tell you is that in future, the supply invoices that you receive will not be normal supplier invoices anymore. It will be an e-invoice. And then it comes with a QR code. Right? So, and then after that, once it's validated, maybe only you want to key in that in your accounting system. Okay, so this is one thing. So we wanted to share with you the features that we'll be will be released soon, is the quick scan method, where all you need to do just upload your PDF e-invoice in the system. And then we'll help you to capture the e-invoice information using the QR code. We'll help you scan in short. All right, so another features that we have is from API, and it's an API integration with MyInvoice as well, where you can actually retrieve your supplier e-invoice using the system, meaning that all the supply e-invoices that you receive from your supplier in MyInvoice portal, we are able to help you to download the information from there. So what to do with the information that we downloaded? You convert that into a transaction. So this is actually some of the features that we are planning to release very soon. And then, of course, since we already have the information, we are able to submit a rejection request also from the system directly. We don't have to log into MyInvoice portal to perform all these actions. So that is actually basically some of the functions. I would say that some of the functions in our e-invoice module in Q&EI Cloud Accounting. So let me just have a very brief, a very short introduction about Q&EI Cloud Accounting. Like as the name suggested, our strong proposition of this Q&EI Cloud Accounting, of course, is AI and also cloud. So what are some of the automation features that we have? The first of all is the quick scan that we mentioned just now, where you will be able to skip all the data entry job from now on, because the conversion of your expenses will be handled by the system, will be handled by the robot in your system very soon. So quick scan is one of the features that we are actually proposing. We are still enhancing it aggressively to make it much more intelligent to help you to ease your tasks in future. So let me just introduce these features here.
Are you tired of time-consuming hassle of manual data entry? Do errors in your financial records keep you up at night? Say goodbye to these challenges with QuickScan, the revolutionary OCR module by Q&E Cloud Accounting. QuickScan isn't just another document converter. It's your personalized financial assistant. With its advanced optical character recognition technology, QuickScan transforms printed and handwritten documents into accurate transaction entry. Imagine a scenario where our sales executive always on the go to travel to different places, while our accounting staff receives numerous invoices from a travel agency every month for transport, accommodation, travel visas, and more. QuickScan simplifies the complexity. It learns and categorizes these travel expenses effortlessly. With just a scan, QuickScan identifies and records the details, ensuring accurate financial records without the manual hassle. But here's the game changer. You can train your QuickScan robot. It can handle invoices, receipts, and utility bills effortlessly. Simplify your task with QuickScan and experience hassle-free automation. QuickScan slashes the time spent on manual input. Its built-in algorithms guarantee accuracy, eliminating human errors and financial discrepancy. By automating your data entry and speeding up the entire process, QuickScan not only saves you precious time, but also valuable resources. Focus on strategic business activities and let QuickScan handle the paperwork. QuickScan isn't just a tool, it's your intelligent assistant transforming tedious data entries into a seamless, automated process. Experience the future of accounting with Q&E Cloud Accounting's QuickScan.
All right. So this is QuickScan. It actually helps you to reduce all the errors that human might make and to actually increase your data entry job, actually increase your efficiency also. Other than QuickScan, we also have Train My QuickScan, which is a setting for you to actually train how you want your robot to actually work for you. Okay, so other than that, we also have QBot. So QBot is actually a chatbot in our system. It has a built-in chatbot. It actually helps our business owners to actually go inside the system without actually going into the system and generate the reports he don't know where it is. So just chat with QBot and the QBot will provide you with the information you require by just asking QBot in the system. QBot will help you to generate all the information you require. For example, your bank balance, your P&L report, your sales report, and so on. So all these information are essential for our business owners, our bosses to make decision whether or not they should expand what is the current financial health they have in this sense. All right, so other than that, we also have this, what we call a financial ratio interpretation. So interpretation, what it actually means, it actually helps you to analyze like how you ask for outsource accountants to help you to do analyze. This is a very brief analyze on how your actual business performance is working. Is it healthy? Is it at risk? Do you need some improvement to actually help your business to grow? So this is a very quick and also immediate analysis on your financial health. This is what we call financial ratio interpretation. All you need to do, just click on QBot, and then QBot will actually gives you a very long karangan. What is your current financial health? Is it healthy? Are you behind your competitor? Are you staying ahead of your competitor of the same industry? So everything QBot here will actually let you know what is your actual result in the actual business world. So other than the analysis, it also provides information, other than information and also methods, how you can actually improve on the performance side. Other than these Bank automation is also one of our important feature here. We are actually integrated with EOB also with the EOB SME apps. And also we have another features, what we call auto bank recon. I know that under other very average circumstances, I actually interview quite a lot of accountants. How long do they need to actually perform one bank reconciliation? So according to them, at least 25 to 30 minutes. 25 to 30 minutes. Using our auto bank recon, it can be reduced until up to 1 minute. Within 1 minute, all your bank reconciliation will be matched automatically by just uploading your PDF bank statement into the system. So system will help you to browse through your OR, your PV, and then match it accordingly. And then if there are certain payment voucher or OR is not found, they can actually view. The system will actually help you to ask whether you want to create a transaction for this payment or for this payment received or not. So this is a features that we have. You can use by uploading the PDF. You can upload the CSV bank statements from the bank, and you can use our Q&A template as well. So depends on the user, whichever that is suitable for them. All right, so that is all from my side. So I thank you all for your attention and time. So we will just move on with our next session. I will invite Amanda again. I'll pass back the floor to Amanda. Thank you very much.
All right, thank you, Shirley. So up next, we will be moving on to our Q&A session. So I would like to invite Mr. Michael up with us, and Shirley, you may stay on stage. All right. So here we have some questions, quite a lot of questions from you guys. So maybe we can start with the first question, which is from Superchip Computer and Services. So he's asking if we lost our data on our accounting system, we key back into the transaction, we will need to submit the e-invoice again or not? Maybe I can pass to Mr. Michael.
Yeah, thanks, Amanda. No, if you lost the data in your accounting system, you are not required to submit the e-invoice again. The reason being, if once you have submitted the e-invoice in the past, that data is being kept on IRB's server. If you were to resubmit the e-invoice again, you will be double counting your invoice, your revenue, right? But from accounting system, maybe surely you can share how would they want to redo the data on the system?
Yeah. So sorry, we have an echo there. All right. So for this one, of course, this is where the validation control comes in handy. If you really lost your transaction entries in other system, I mean, if you are using our system, of course, there won't be any loss in that. Probably no, because the server is actually on cloud, so it's really hard for them to make it disappear. So this is actually one of the advantage of why we are actually promoting cloud services like WhatsApp. You can still backup, download back all your chat and everything. So this also applies to accounting system. So so moving on from the cloud thing. So if you really lost your data, of course, you can actually we will recommend you still key in back all the transaction. That's the first thing. And then you have to check with your vendors, your system, whether there are any solution for that. So in our system, of course, we have an exempted validation control so that it won't keep prompting you to submit e-invoice for this transaction anymore. All right. Thank you.
All right, thank you. So next up, we have another question. So from Desmond Chia. So during a relaxation period, which is 6 months, for B2B, which they will need to request for a consolidated e-invoice, even though the company name is not specified in the console e-invoice, is it? So I'll pass this question to Mr. Michael also.
Thanks. No. So during relaxation 6 months period, the buyer does not need to request the consolidated e-invoice. With the commercial invoice or the receipt that you receive now, there is sufficient for tax deduction claim. Reason being is that it is not yet a requirement in law to use e-invoice to support your tax transactions, your transactions for tax purposes. That will come in at a later stage, potentially in 2026, after all the relaxation period has lapsed. So just to keep in mind, consolidated e-invoice is generated just for the supplier's own retention. The buyer cannot request for consolidated e-invoice from the seller.
Okay, so thank you, Mr. Michael. Next question would be from Celine. So she's asking, do all the companies' e-invoice issued and validated by LHDN needs to be traceable or reflect in the company's accounting statements? So this one I will pass to Ms. Shirley.
Can I have the question?
Okay, hello. Yeah, so we have a question from Celine. She's asking, do all the company invoices issued and validated by LHDN needs to be traceable or reflect in the company's accounting statement?
Traceable needs to. Can I have the question on the screen?
One moment. We have some little technical issues over here. So yeah, all right, the questions is up.
Accounting statements, not really. I mean, there are no laws that force you to actually reflect everything in your accounting system, because we know that there is a possibility that you will be using multiple systems. For example, a POS and accounting system, and then your branch might be using another system. So in LHDMI invoice actually works as a all-in-one station that actually receive all these tax submission from not tax submission, your e-invoice submission from all these systems. They are actually all-in-one thing. So it doesn't really need to be traceable or reflect in the company's accounting statement, but if you can, it's better to be, because I think there are certain transactions that is not required by to submit as e-invoice. For example, if you receive invoices from the 150K and below, they won't be providing you with any e-invoice. So for that, you will still need to include that into your accounting system, but it won't be reflecting in HDMI invoice portal. So there is a possibility there will be a gap there. So maybe Michael have any other suggestion on this?
Yes. So what happens is IIB in fact will use the data that they collect from e-invoicing to compare with the data that you're submitting on your tax returns, because although your accounting statements are not submitted, part of the tax returns for companies, you're actually submitting your financial statement data, right? But of course, this needs to be based on audited accounting statements. So there is a gap, like Shirley has mentioned. If let's say you procure services or goods from MSME that's below 150K, you won't that the transaction won't go through the LHDN system. Then you will need to substantiate that by the commercial receipts or invoices that you receive. There must always be a document, even though it's not e-invoice. The general rule of thumb is that every transaction needs to be supported by a document. Okay, that's one. There's another instance where there's a discrepancy between your accounting statements compared with the IB's data, is for cross year-end transactions. So there might arise a situation in fact it's a real life situation. If you transact on the last few days of your financial year end, there is a situation where you only generate e-invoice in the following year, in the first day of the following financial year. In IRB system, that income will be recognized in the following year, but your auditing standards require that you recognize the revenue in the current year. So there will be a discrepancy there. We always recommend for the company to maintain a reconciliation account to account for all these differences, so that if IRB comes to audit, you have an account on hand to tell them that the differences arise from A, B, and C, and it tallies back with your audited audited financial statements.
See, this is why we need a professional accountant. They will tell you what you're supposed to do, how you're supposed to think, what you're supposed to feel like. You feel assured after you hear it. Michael's advice. Maybe next question from.
Yeah, all right. So next question is from Miss Bernice. So she's asking, so for the director's claim, right, those entertainment claims, food and etc. needs to have a e-invoice to claim, right? So I'll pass the question to Mr. Michael again.
Yeah, thanks. Yes, director's claim or any employee's claim, in fact, you'll need e-invoicing to claim in the future. But because this is a employee's claim, then there's a concession where the e-invoice can be either the employee's name or the company name, depending on. It's up to the employee to request for the e-invoice.
Okay, so upcoming, there's another question by day. Okay. Mini Mart sales transaction incurred on 15 August. So one of the customers requested for an e-invoice on 25th of August this year. So e-invoice issuance date can't be backdated for more than 3 days. So how do we handle this? So I will be passing the question to Shirley.
All right, so for this, I think Michael did share a diagram about the deadline of e-invoices. So whenever the customer come and request the e-invoice from you, especially in this scenario, the submission of the e-invoice date will be the date of the e-invoice. So meaning that even though your transaction happens on 15th of August, the e-invoice will be dated on 25th of August.
Correct. That's why in the earlier question we got that reconciliation issue. So that's where this comes into play. There is situations where the date of e-invoice will vary from your transaction date.
Okay, so thank you. So coming up for the next question by Miss ST, she's asking, appoint agency company as agent. So although agency company issued and provided me the e-invoice for commission, do I need to do self-bill in the end? So this one would be passed to Mr. Michael.
Yeah. No. So moving forward, the agent company will not be issuing e-invoice anymore. They're not required to issue invoice because the rules specify that this transaction falls under self-bill. So the agency company won't issue e-invoice, but you will need to issue a self-bill e-invoice and give it to the agency company for them to as their proof of income.
Okay, so I hope that one answers your question, Miss ST. So next off, we will have a question from Lim P. So he's asking, does businesses under 25 million sales can start using e-invoice earlier before 1st of July 2025? So this one would be to Shirley.
Actually, there are no rules on when you should start. I mean, if you want to start early, there's no wrong with that. The implementation date that we mention every time, when you go to every seminar, they will mention these 3 dates, is the deadline where you should start. It's not the start. If you want to start early, no wrong. The regulation will apply after the implementation date of your business. Whenever if there are any offenses, any penalties, it will apply only on the transaction after your implementation date.
Okay, So thank you, Shirley. So next we have a question from CH. He's asking for for small restaurant businesses, right? We would use handwritten receipt upon request, and we will record based on our daily sales, but not by transactions lah. Now we should record every transactions and do consolidate invoices monthly, is it? So this one would be to Mr. Michael.
Yep, CH. Technically speaking, you're supposed to issue a receipt or commercial invoice for each transaction, not by a daily by daily. So with those each transaction, the receipt, then you can compile it and prepare a consolidated e-invoice at the end of the month. That is the correct way to record your sales, in fact. But of course, you're saying you're a small business, so one thing to consider is whether you fall under the 150K exemption. That is something to look out for.
Yeah. I think you need to start to look into a simple POS system, for example, to actually issue out your receipts per transaction, because you need to consider one scenario. If you are doing console only, what if there are customers come and request an e-invoice from you? How are you going to extract that from a daily transaction? What are the reference that you'll be using? So this is one thing you need to consider also.
Okay, so thank you. So next up, we have a question from SY Ang. If we use MyText to issue e-invoice, IRB can generate QR code, is it? So this one would be to Shirley.
You mean my invoice portal, right? Yes. They will still be able to generate the QR code for you.
Yeah. Okay. So is that clear, Mr. Ang? Okay, so next up we would have another question from Ng Ming Fen. She's asking for staff's petrol and mobile claims. They need to request e-invoice under their personal name. How about staffs buying tools at convenience shop like Mr. DIY, 99 Speed Mart, and etc.? So is it that they would need to request an e-invoice from the provider vendor itself? This one would be to Mr. Michael.
Yep. Similar like staff claims for petrol or mobile claims, you will need to request the e-invoice either in the name of the employee or the name of the company for tax deduction claims in the future. But one thing that we noticed from some of our clients is we need to be careful. This needs to be staff claims. Staff claims meaning that the employee pays first out of their own expense, and then they claim back from the company. This concession where the e-invoice can be under the staff's name it's not applicable if, let's say, you're using a company credit card to pay. Because if you use a company credit card, strictly speaking, it is the company paying directly to the vendor. So this is just one of the small things that you need to take note of so that you don't fall under non-compliance.
Okay, thank you, Mr. Michael. So next we have Miss Winnie Hong's question. She's asking, our clients mostly use credit card merchant lah. So in bank statements, we receive in a lump sum amount with each detailed transactions in description. Do the system still able to read the for bank reconciliation? So this one to Miss Shirley.
Okay, so this is about payment, right? So in actually, IRBM doesn't record your payment. It record your sales. So meaning that with all these lump sum payment or lump sum amount you receive, you should have an invoice or a cash sales or receipt where your customer will be paying according to these documents. So these documents is the one that you need to submit to IRBM instead of the credit card statement. So this is two different things.
Okay, so next up we would have Ms. Yvonne. She's asking if our company charges for reimbursement, which is not needed to include in e-invoice. How should we issue the e-invoice? So this one I will pass to Mr. Michael again.
I think there's a confusion here. Reimbursement is the one that is required for e-invoice. Disbursement is the one that does not require e-invoice, right? So if you're going under reimbursement, then you need to detail down the separate line items in your e-invoice when you charge it out to the client. If it's a disbursement, potentially you can just issue a receipt as a proof of receipt of payment. So you'll take the e-invoice or the invoice from the original party, which is issued in the name of your client. You just take this document, pass it to your client. Once the client makes the payment, you probably need to issue a receipt, because your client will also want a document to confirm that you have received their payment, right? But it will not be under e-invoicing.
All right. So, okay, there's another question from Xiao Fen Pang. Is a non-profit organization or sports club registered under RLS fall under LHD and e-invoicing requirements? So this one I will need to pass to the specialist, Mr. Michael.
Yes. Any entity that conducts a business would be under e-invoicing. This includes non-profit organization or sports club registered. Why we say so is we need to be careful, because some of the people that are making payment to you require e-invoice, right? One. Two is certain sports clubs, or not just sports clubs. I think more commonly for us is those condominium JMB, joint management bodies. A lot of them do not realize that actually some income, especially such as they like to put excess funds into banks, the interest income you earn is actually taxable income. Only those that you collect from members are tax exempt income if you meet the conditions, right? So there are certain instances where you have taxable income, then you actually need to look into e-invoicing.
Okay, yeah. So next off, we have a question from Lane Tay. So she's asking, is a small retail hardware we have credit customer currently invoice billed month end? So accumulated all items during the month end and billed one shot. So is it applicable for e-invoice also? Pass it to Ms. Shirley.
Yes. So e-invoice does not have certain what we say formats to that. So it means that if this is a statement type of e-invoice, you are still able to submit that as an e-invoice. So you can still do whatever you are doing now, accumulated all the items, and then just bill the customer in one shot during month end, and submit that as one e-invoice.
Yep, maybe I can add on.
Yeah.
IRB in various public speaking engagements, whether seminars, webinars, they have always confirmed that the implementation of e-invoice should not impact how you run your business, right? So if in the past your business model is that you have these credit customers and you only bill them at month end for whatever they have bought during the month, for e-invoicing purposes, you can maintain this business model. So you just accumulate up the sales that they made and you bill them one shot during the end of the month. But this has to be consistent with your commercial invoicing. You cannot be in a situation where you issue commercial invoices over multiple transactions over the month, but you only issue a single e-invoicing at the end of the month. It must match with your commercial invoices.
All right. Yep. So thank you, Mr. Michael. So coming to the last question that we have for today. So it's from Miss Audrey. She's asking, our customer, once they receive goods and make payment in between 7 days, so then they will need to issue a 3% discount on credit note. So is it this credit note would be submitted to LHDN also? So pass it to Miss Shirley.
Yes. Whatever that because credit note is one of the e-invoice, you don't confuse by the name of e-invoice. It actually covers debit note, credit note, invoice, and refund note. So if this credit note actually reduce your income, you should submit that to IRBM.
Okay, so thank you, Miss Shirley. So coming up to this part, we are at the end of our Q&A session. So thank you for all your questions. So I hope that you guys would have knowledgeable from both our specialists here. So thank you, Mr. Michael, and thank you, Miss Shirley. So you guys can have a rest first. Then next up, we'll be going into our lucky draw session. Okay, so as we wrap up our seminar, before that, you remember you guys have all participated in our lucky draw, right? So one of our lucky winner will be receiving a 12 months free subscription to the Q&E AI Cloud Accounting Professional Plan. So here we have our spin, which can you guys see your names over in the spin? So let's us have the spin now. So best of luck, everyone. Let us spin the circle and find out who the winner is. Ayo, kanchong. Oh. Okay, so congratulations, Liming. So are you here? Are you still here with us? Eh? He's not here.
So say hi if you hear.
If you are here, you can say hi to us. Oh, okay. All right. So we will be sending you an email okay, of the voucher of this gift prize. All right. So thank you for participating for all of you. So from here, we will be ending already. So thank you for participating in our webinar today. I hope you guys would have a very valuable knowledge from our session today. So hope you guys would have a great weekend. Thank you. Yeah, congratulations to him also. So remember to text us, or we can email you. All right. So thank you guys. Have a great week ahead. Bye.